Hello, I hope this finds you well and enjoying the holiday season so far. As you know, major tax reform legislation has made its way through both the House and the Senate and is heading to President Trump's desk for his signature soon. In an effort to keep you informed, we put together a list of the top 10 changes that are of interest and could potentially impact our clients. Number 1, individual tax brackets. While we will continue to have 7 tax brackets, most are going to decrease by a few percentage points, and the new top rate will be 37%, down from 39.6%. Please keep in mind that while corporate changes are permanent, individual tax cuts are scheduled to sunset after the year 2025. Number 2, C corporation tax rates have decreased down from 35% to 21%. Number 3, personal exemptions have been repealed, but the standard deduction has about doubled. It looks like net-net this new expanded standard deduction will represent only a slight increase. Number 4, the child tax credit is increasing from $1,000 to $2,000 per qualifying child under the age of 17. Additionally, the income phase-out rules for this credit are substantially increasing from $75,000 for individuals and $110,000 for married couples, up to $200,000 for individuals and $400,000 for married couples. Number 5, there is now a $10,000 cap on state and local income and property tax deductions, also known as SALT. Please keep in mind that the new bill does not allow for prepayment of 2018 state income taxes. Number 6, mortgage interest deduction is now limited to loans of $750,000, and home equity loan interest is no longer deductible. Note that this limitation only applies to new mortgages taken out after December 15th of 2017, but that existing home equity debt will not be grandfathered. In other words, after 2017, interest on home equity debt will no longer be deductible unless the funds were used for substantial home improvements. Number 6, you can now use 529 plan distributions tax-free to pay for private elementary and secondary school expenses. The limit is $10,000 in distributions per student each year and includes public, private, or religious schools. Number 8, alternative minimum tax, or AMT, has been significantly altered and will now impact fewer taxpayers. Number 9, estate and gift tax exemptions have been doubled from what would have been $5.6 million in 2018 to $11.2 million for individuals, or $22.4 million for married couples with the portability feature. No other changes were made here. Step up in basis remains, as does the top 40% tax rates on estates past that exemption level. And lastly, number 10, the individual health insurance mandate or penalty has been eliminated, but not until 2019. A couple of topics that clients were worried about that did not make it into the final tax bill were, firstly, the FIFO issue, or first in, first out treatment of sold investments, and secondly, the change to capital gains exclusions on sales of primary residencies. Both of those two issues remain unchanged. So for the sake of time in this video, we wanted to review the top 10 changes we thought clients would be interested in, but please be aware that there are additional changes in a few other categories that could potentially impact you. Some of these include alimony payments, 1031 exchanges, depreciation for business cars, deductibility of entertainment expenses, and a new pass-through entity deduction. If you are interested in learning more about these, please feel free to reach out. Although everyone's tax position is going to be impacted differently, there are a few planning strategies we wanted to share with you before year end. In general, you may want to consider deferring income into 2018 when tax rates will be lower, while accelerating deductions to 2017 that may not be available to you next year. Although the new law does not allow you to prepay 2018 state tax liabilities, you can pay your fourth quarter 2017 state taxes that would normally be paid in mid-January by December 31st of 2017 to take the deduction this year. So what hasn't changed is that our tax code continues to be complicated, and we always recommend that you consult your tax advisor to understand how this new tax bill will impact your personal situation. Thank you for taking the time to watch this as always, and if you have any questions, please feel free to reach out. Happy holidays to you and your family.